Hey guys, let me give you an update on some of the positions that I have previously not talked so much publicly about, which are Xunlei, so ticker symbol XNET, ZEPP Health. Let's talk a bit about Meituan because they just had earnings and there's some interesting development. And then also some news related to Baidu. Of course, no Dongxi video is complete without talking something about NIO, so let's start with this. So since I made my last video around here when NIO broke through this downward trend line, NIO actually did come around quite a bit, actually managed to go beyond the $38. As I've mentioned, that was some serious resistance and stabilized there, I think, for around 2 trading days, because otherwise it could have been easily rejected there and go back to the very lows of $34. But it seems like it even wants to go higher from here. We have the overall market trend right now that we see some positive signs around the inflation fear, so that some of the asset prices are actually declining already. For instance, lumber. We had more trouble around cryptocurrencies and about AMC and GME, so this kind of liquidity crisis kind of is playing out, as I have mentioned. But I think in general we see some good positive vibes also around Chinese stocks in particular. I mentioned that many of them are now at some levels where the valuations make sense, and also that it seems like they are really sold off by 40 to 50%. Now the US dollar is weakening, which is always good for Chinese stocks, and also the economic growth data as well as some CPI data from China is quite positive. So in general, maybe we see a turnaround in the Chinese stocks from here. I don't want to jinx it and I don't want to call this a bottom here, but certainly some of the sell-off pressure is actually kind of gotten less of a steam right now. For NIO, we are now waiting for the delivery numbers, which we should get by tomorrow. And in my views, they should be around 7,000 to 8,000 vehicles. Due to the chip shortage, they should be quite similar to what we've seen last month. And we don't have a very bullish guidance, more like a normal guidance here from NIO in the last earnings calls. But I think what NIO is actually managing to do right now is tremendously scaling the capacity of the factory in the background. We have lots of news around additional capacity with the JAC venture going on. And I just feel that they will be at a 120,000 to 130,000 annual capacity by the next couple of months, actually. Then obviously the question is like, how many chips will they get in order to sell to the customers? Let me also talk about the rumor regarding a next version car of NIO. There has been news that there will be a new car coming out from NIO that could be mass market production car. Project Gemini, I think, is the code. Personally, I'm still a bit skeptical here whether or not that this is a lower priced mass market car, because I do think that the 60,000 capacity that they're trying to build for it is actually speaking against that. And the way I read Li Bin, he wasn't too keen on actually going to do a mass market brand as soon as possible. I think they will do it over time, possibly under not the NIO brand, but a new brand somehow. But I think it might have actually something to do maybe with the NIO Eve and this autonomous car connected to what Mobileye and NIO are doing as a partnership in Israel. I'm not entirely sure. This is currently pure speculation. So for now, I personally also don't know if it's the mass market car or not, but I've seen that this has been the first interpretation by some, and I'm not 100% sure if this is really the case. Either way, if it's a smaller car, or if it's having something to do with this Eve concept, I think we're gonna hear about it in NIO Day coming up, in December, I guess, this time again. Before that, I don't expect any real confirmation by NIO themselves. But we do have many important and exciting things coming up with the launch in Europe next. And as you know, I am particularly keen on what will be the development about NIO and its e-commerce platform. Okay, let's talk about ZEPP. I have some news around this company, and as you know, I have officially turned a bag holder of ZEPP. Now my average cost is around $11. I haven't sold anything, but recently I also didn't really see that I wanted to average down on this position. I still think this is a long-term, really long-term investment on my side, but particularly not too keen and happy about the results of the last quarter. I mentioned that in another video. Now, regarding one big question mark that I had before regarding the acquisition of Yitong, which is a Chinese Shenzhen listed company that is actually originally a hardware manufacturer. We now see some news around that. And before that, we didn't really know what ZEPP is actually doing with this company, why they invest in this kind of, let's say, even a shell company in a way, because it didn't really fit to ZEPP's core business. And at the same time, there was some speculation that this could be used in order to tap into the capital markets in China. So for the mainland Chinese that want to invest in A shares. All of this didn't make much sense. The management also didn't tell us more in the earnings calls, and they didn't want to say more about this also in my emails with investor relations. So now I have some news to share from Chinese sources. So this is an automatically translated article here, so it could have a little bit of Jinglish inside. And I posted it here in the Patreon community, and is about that Huami Technology has now authorized Yitong Technology to work together to reshape the core value chain of the big health industry. So the companies now announced that Hefei Whale Microelectronics, that's rough Chinese translation here, which is a wholly owned subsidiary of Yitong, has gotten the intellectual property rights by Huami Technology or ZEPP Health for the heart rate sensor modules from Huami. Yeah. When this news was announced, the shares of the publicly listed company in Shenzhen of Yitong Technologies actually rose by more than 15%. And that's where Huami actually has, I think, around 33% of ownership into. And that's because, this company is now kind of getting new life. And now kind of the task by Huami to manufacture those sensors, I guess, accordingly for Huami. And it's interesting to see because Huami started out as the manufacturer actually for Xiaomi, so for the Mi Bands and so on. And now it seems that kind of Huami is getting in this new stage where they are actually acquiring other companies in order for them to give them the outsourcing in a way here for their IP-based development and manufacturing of the sensors that are going to be used then in the Huami or ZEPP branded products. With that, it's a bit of a confirmation, or at least it gives us an idea of what ZEPP Health wants to do with this acquisition of Yitong, which was actually quite a big deal in terms of money that they invested. So it seems that they're using this company for their hardware manufacturing capabilities, but also possibly as a way of kind of distributing some of their assets. It seems that they want to build out this company as a way of cooperating on the manufacturing basis, and maybe thereby ZEPP Health, actually, that's just my interpretation, has a little bit more freedom to focus more on the R&D side and more on the data, hopefully, and the services business, as well as on building their brand as ZEPP Health overseas. Because actually they can transfer some of the manufacturing into this new company in which they can build a team, an R&D team and a corporation team that works in sync with what they want to do. And on top of that, my interpretation as well is because we had this announcement of ZEPP that they're gonna, they have different acquisitions in some areas of medical health technologies. And I think what actually this Yitong technology could also be used for ultimately could be that they get that ZEPP Health could get more licenses, for instance, by some of those investments that they have. They are, for instance, in MRI technology and so on, that they can get those licenses and let this local manufacturer produce on behalf of them and then distribute it not only in China, but maybe also exporting it overseas, but based in this kind of new plant or cooperation partner here in which ZEPP actually holds the majority of the stake in it, and which interestingly has board of directors from Baidu Ventures actually. Ultimately, it's the first indicator coming from the Chinese sources from this acquired company, nothing directly from ZEPP Health as of now, but I guess it gives us a better understanding of where things are going. And once again, as with this investment, it takes some time. And why I invest in ZEPP Health is because of this opportunity that I see in many business areas, not only for the wearables, but actually more on the data side, on the services side, and now also the medical devices that they could, for instance, now with Yitong manufacture together, even though that this is just speculation from my side for now, but I see those new business streams. And the interesting part about ZEPP is that, of course, right now it's valued as a device manufacturer. Therefore, the company valuation is quite low. I would even say that given for what they're doing right now, it should be valued way differently. Anyways, why I think it's interesting to invest in companies like this, which are currently still valued with, for instance, a low price to sales multiple, is if they have the opportunity to grow into something else, this could actually unpack and release quite a new valuation in the future. So for instance, one example actually is Tesla. Tesla is in the beginning only kind of a car manufacturer, but people knew that this company has the big potential of software-enabled services, that they have high margins, that they are disrupting a new kind of an industry, and that they're going to be like the biggest player in that from the very beginning. For car companies, they are not valued as high, but those companies usually also cannot unpack this kind of a potential. Now, the same thing could possibly in the future apply to something like ZEPP Health. Right now, yes, it's a device manufacturer in a way for wearables, right? But the minute that ZEPP Health can actually execute on all of the data that they have collected, as well as unleashing new services to this big ecosystem and health service ecosystem, then the valuation also needs to change for this company. And we will also see the market dynamics shift, in my point of view, because I think prevention in healthcare can reduce costs significantly once we see that, for instance, insurances use this data to underwrite new policies and so on. I guess this is the point in the near to long-term future, maybe, when we will see a change in the valuation of this company. But of course, for now, this is only going sideways, if not downwards. But if you remember my chart regarding seasonality, you can also see that during the sell-off, of course, it hit its all-time low here or not the recent all-time low, at least here in May. And now it kind of starts to beautifully go, hopefully, into this upwards a trend towards July. Let's see if this really will happen, followed by a sell-off, maybe once again to another peak in February, as mentioned last time. This seasonal pattern holds true, then it will keep on being volatile for the near-term future, but this could be really tiny in comparison once ZEPP hopefully ultimately really takes off, in case that the management and the company can execute on the big vision which they actually are having. Now let me talk about Xunlei or XNET, which I have already shared some of updates in the Patreon network, and there's some news regarding my position. I previously had some lows here and also bounced once again off here, and is now moving towards this wedge pattern here, in which we have a downward trend coming here, which if it breaks this one to the upside, it could actually go all the way to $6. Otherwise, if something happens or if the market conditions are unfavorable, it could also fall back to $4.20 around that easily. Since the last video I made on Xunlei, I actually have increased my position. I first invested in XNET. I kind of saw an opportunity there. The fact that it is active in the area of blockchain technology, but also cloud computing as well as advertisement. I saw that this company has some really good upside potential there. At the same time, it was quite lowly valued in terms of that they have lots of cash at hand. And I was thinking that this company could actually quite soonish break even, so turning into a profit. This is exactly what happened. The last 2 quarters which they reported actually were the first 2 positive quarters since, I think maybe even since the beginning. I need to check that back, but certainly since the last year. So there is a big turnaround in Xunlei, and that's quite positive. And also they mentioned that they are going to dive more into new areas, for instance, live video applications, where they wanna actually even build consumer-facing products. And on top of that, I think they have this nice asset of CDN cloud computing, which if you look at companies like Cloudflare, Net, in which I am invested, or another competitor is Fastly, which I'm not invested in, they have quite high valuations, and well, Xunlei certainly has not, but it's also just a tiny aspect of their business so far. But I do see the potential for it to become more important in China. The real big issue with Xunlei is that it's a tiny company. Yeah, it's only having around 200 million annual revenue, and there's really not much of information around it. Additionally, only last year, Xunlei turned around entire management. They got rid of entire teams, so they have a new CEO now as well. And this didn't happen on, let's say, the easiest path, right? So there have been some fights and so on. But ultimately, they even also changed the shareholder structure. So, for instance, the new CEO is now one of the biggest stakeholders, which I think as an entrepreneur, this is good. That's the way it should be. And kind of Xiaomi, which is one of the companies backing Xunlei, has kind of all orchestrated this, which is also an important sign to show. Let's not always talk about the positives and how awesome this is. The company had some allegations in the past by users which have invested on one of the tokens that XNET was kind of issuing. So they could earn a certain kind of, I think it's called link token. But then the price collapsed, and some of the people who invested in that one lost their money, and they're actually issuing lawsuits against Xunlei because in China it's actually forbidden to issue such tokens, at least to make something called an NIO. And in fact, there has been, as far as I was digging into that already, a court in New York that has decided about it and actually said, well, Xunlei did not break the law here. But you need to know that there is a certain basis of maybe users or investors from the past that is possibly not speaking highly of this company due to this kind of experience. So that's maybe some of the negatives in terms of, the management change, all this trouble around this, and also the issuance of this token, which are kind of maybe being a little bit of a black shadow on this company there. Recently, like most growth stocks and particularly Chinese stocks, Xunlei lost a lot of value. And because I just made a speculative position in the very beginning, around $6 to $7, I used this now in cooperation also with what I got as insights from the earnings call, that I basically doubled down and even more than that bought into Xunlei and thereby kind of averaged down my cost in Xunlei, but also kind of increased my position. What gave me the confidence in doing that is comparing it, for instance, to Cloudflare or Fastly, which I mentioned are competitors in the area of cloud computing and CDN, not in China, but overseas, like globally. And as you can see, so Xunlei has a market cap of around $270 million, but revenues close to 200. Whereas, for instance, the market cap of Cloudflare, a company that I'm invested in, is around 20 billion and has only revenues around $470 million. Of course, yes, for Cloudflare, the gross margins are higher, but they're actually similar to Fastly here. And what is the important factor for Xunlei now is that the EPS, so the earnings per share, so the bottom line of the business is now turning positive. So they have huge growth on the EPS, more actually than even these competitors. So the fact that Xunlei turned a profitable company already tells me that they can now just grow from the revenues which they have, and it's a much safer investment at this stage, although what they are lacking in comparison to those other competitors that I just named is the size of the business and also the growth rates of these businesses. But I think there is an opportunity that they can actually dive into that. Once again, coming back to the analogy of ZEPP and Tesla, this is kind of a company that is valued in a very different way. It's coming from a different industry. It recently made, for instance, a strategic change in their business, and are still valued on what the company has been in the past, but not for its future potential. And thereby, it's kind of, just putting some eggs into different baskets here and having the opportunity that at some point the markets will realize the opportunity in these companies, and that's when a huge growth potential is actually getting unlocked. It could never happen. Maybe the company cannot even execute on that. Maybe I'm even seeing a different strategy for these companies. But I think, now let's look even at some market research that I've done for Xunlei, that the opportunity is certainly there. For instance, if we look here for the China cloud computing usage, by today or 2020, only less than 4% of companies are using cloud computing. 44.23% have plans on using it, and possibly the rest is either not woken up yet or currently doesn't have a use case for it, but that will change in the future. I'm quite certain around that. And as always in China, the market is quite gigantic. So by 2023, they expect an overall market for the public cloud. So these are services similar, for instance, to Dropbox, like file sharing and so on, which Xunlei is offering. A total market size of this of more than 35 billion US dollars. And growth rates coming down from 65% to still roughly 30% year over year by that time. Similarly, the private cloud market is also quite big, more than 20 billion estimated by 2020-30. But this is a market in which I don't see Xunlei actually being too much into it. These are services where I see Alibaba Cloud as a platform, as a service provider, is actually more active, as well as, for instance, here Tencent Cloud and so on. These are not the companies where Xunlei is directly competing with. I see Xunlei more as a possibly an infrastructure as a service provider and CDN provider. So kind of maybe a little bit in competition with China Telecom and these providers which are offering CDN services. But as we've heard in a conference call, they actually want to cooperate there. And the clients are for instance, the video platforms like iQIYI, Douyi, Bilibili, and so on. So already today, they are the clients of Xunlei, although we don't hear a lot about the number of clients which they have and how it's improving over time. I was asking this in the last earnings call, actually. But on the downside here, they said they have exclusive agreements and it's not transparent. They couldn't name a specific number there. But if you go to the website, you can certainly see that these names and some of the biggest names are actually listed in public, but they mentioned that they also have a couple of other clients which they cannot publicly announce right now for these services. And especially here for Xunlei is that they have a certain CDN which they can offer that is using idle bandwidth of their users, because it's actually a hybrid cloud system in which bandwidth from users is taken in order to balance the network, and therefore they have really low bandwidth cost that they can use as kind of an income stream, as it's kind of an arbitrage between the traffic that they're buying and the traffic that they're selling. So that's kind of a quick summary of why I doubled down or increased my investment in Xunlei for now. I have more due diligence to share. Most of it is in the Patreon network. If you're interested in that, please sign up and find it in there, as well as a community of people talking about Xunlei, for instance. And on top of that, I'm not specifically talking about Baidu in this video because Miriam, my co-founder, she just made an in-depth video about the business model of Baidu, speaking about all of the aspects of the really complex business model of Baidu. So you'll find this also as a Patreon supporter. Possibly later on we have a couple of video snippets that we're also going to show publicly here. But for now, this is going to be a series of in-depth videos going into Baidu specifically. And last but not least, let's talk about Meituan, in which I have a position. And I actually, during the tech sell-off, I have kind of increased my position as well. It was one of the few companies where I actually kept on buying. And the reason for that is that they have actually doubled down their investment in the area of a robo delivery fleet. So those cool cars, which you can see here, that are driving around and delivering autonomously. And as an investor, what I think we can expect from that is that they can significantly decrease the delivery cost, which is already, well, a part of the business model, of course, since they are mainly delivering food, and which is a huge business in China. It has a huge acceptance of their customers, and it's a huge business. But now if they manage to bring back the cost enabled by those delivery unmanned vehicles, then this should be really good for the bottom line of Meituan. And I know that in the latest earnings call, they now didn't show a profit anymore, instead showed a decline. But still, I think this is an investment for the long run. I know this is maybe not one of the cheapest companies to buy in right now, but it's one of the big companies. And as I mentioned before, I'm not so much worried about the problems around regulatory troubles with investigations into their business and so on. I think Meituan should be doing fine on this side. What I actually care about is in what kind of verticals Meituan is actually going into. And now with this fleet of robo delivery vehicles, I think it's quite cool to see how they leverage autonomous driving for their current business. I think they will be one of the fastest to adopt autonomous delivery in China, which they now have gotten even a license for, and also might use drones in the future. So these are maybe the things that you on the first spot don't see if you look at a company like Meituan, but in the future maybe Miriam also can do a deep dive on Meituan, because there is so much more potential besides only the food delivery. But let's close it for that. I'm not worried about my current position in this company, and I added to it. And although the earnings haven't been great on the bottom line, I think I rather see the investment that they are taking there. All right, that's it. A little bit of a longer video covering a couple of positions. I hope you enjoyed it, and thank you guys for watching.